This rotation into value should benefit Tokyo stocks.
Well, we believe so, because right now company fundamentals around Asia are in quite good state, but we are seeing this deceleration in growth around the world. And with that in mind, I think investors may want to rotate away from the growth stocks into the value stocks. And Japan has been for many years a deep value market, but also a market which has got very strong company fundamentals, strong balance sheets and decent dividend growth. And I think with a change in mindset from investors globally, Japan's got quite a lot to offer. And from that perspective, Ikeda-san, who's our head of Japan equity strategy, I spoke to on Monday, he's looking for a 32,000 target for the year end and again through to March 22. And that's a decent 8% return, which might sound modest, but in this context of the markets right now, it's not bad.
So the other thing that's playing out, which is quite interesting here in Asia, is this divergence when it comes to central bank expectations, but also what they're actually doing, right? Given that you do have a number of central banks that have already started their tightening cycle. Are there opportunities in that divergence?
Well, I guess there are. I mean, if you look at Korea in particular, that's a market which has seen a lot of kind of social dislocation as a consequence of rates being incredibly low. If you guys have been watching Squid Games, you can see there's a lot of society problems in Korea which relate to the fact that you've got a big inequality of wealth. And a lot of the Korean population attribute that inequality of wealth to the fact that you've had these low interest rates for so long that's causing this dislocation, inequality from a government perspective. So with a change in government in Korea in March, that might be an opportunity for rates to be reset, for fiscal policy to be reset, and a basic income being paid to everyone. So there's so much complexity going on around the region. And I think with the change in leadership in Japan, with a new prime minister at the end of October, then wealth redistribution will be a big factor as well. So it's not just central banks. I think central banks and governments are working in tandem together. So the kind of independence we've had historically, I think, is now broken.
Yeah, well, there's ongoing tech hearings in South Korea, or of course, all of the talk of new capitalism in Japan, right? Jim, how spooked should investors be, given that we also, of course, have the common prosperity drive in China?
Well, I think with Japan in particular, it's almost like back to the future. In Japan, we've had this notion of stakeholder capitalism, or Gappon Shugi as it's known locally. And this goes back to a gentleman called Shibusawa-san, whose name will be on the 10,000 yen note coming up from next year. And he was all in favor of this idea of capitalism with a human face, collective capitalism. Good companies should actually not just look after the shareholder, but look after employees, the community and society. And this really ties in with ESG. So I think investors can play that, but they need to be mindful that shareholders will not be the only priority. And for that reason, things like dividends, I think, will become more important when making an assessment whether to be invested in a company.
Yeah. How important is dividend growth, especially when, of course, when we're talking about equality, we're talking about also prices rising for consumers. That's really not helping. So when you have these inflation concerns, how important is dividend growth as well?
So I think from our perspective, if you have got a bunch of policyholders that are looking to see an annuity income which is increasing every year as a hedge on inflation, and in countries like the UK, for example, we've got CPI numbers go to 4 or 5%. So that means that if you are getting an annuity from, let's say, some kind of policy, you need to see that annuity grow by 5% every year to match inflation. Now, from that perspective, dividend growth is quite important. You can create income in two ways in a portfolio, either through income from a bond, for example, or from an equity, or through trading something, so buying low and selling high. I think from that perspective, looking at some of the equities in Asia, especially in Taiwan, especially in Korea, and particularly in Japan, you're seeing dividend growth which is double digit. And that, I think, will become attractive, and that will put some squeeze on valuations. So Japan, from that perspective, is looking in good shape.